While Bitcoin BTC-USD has dominated headlines this year, there is a case that the real action is with Ethereum ETH-USD. Indeed, compared to an impressive near 100% gain in Bitcoin thus far in 2021, Ethereum or Ether has climbed by over 500%. The attraction is its open-source public blockchain that facilitates an ecosystem with an endless number of use cases and digital applications. Indeed, everything from decentralized finance or DeFi to non-fungible tokens, NFTs, and several high-profile altcoins like Shiba Inu, SHIB-USD all exist within the Ethereum platform. People are bullish on Ether and expect more upside through 2022, supported by several positive tailwinds. This video is brought to you by Answerly, a question platform that pays you for adding high-quality answers on different questions. The users are rewarded in Answerly tokens, which they can easily convert into dollars or any other cryptocurrency by using one of the exchanges mentioned in the description. Hello and welcome to our YouTube channel. In today's video, we'll be checking out Ethereum's price prediction for Q1 of 2022. First, let's take a look at Bitcoin. Flagship cryptocurrency asset Bitcoin lost its trillion-dollar status for the second time this year as panic selling pushed the asset class to lose 18.78%, representing one of its biggest one-day drops since the 50% crash of May 2021. Its market capitalization currently stands at approximately $900 million. Bitcoin started the day trading at $53,598. However, due to the sell-off, it lost over $10,000 to trade as low as $43,530, according to data from CoinMarketCap. Due to the sell-off witnessed in the market, data from CoinGlass also reveals that over $1.97 billion worth of leveraged longs got liquidated in the process. As a result, Bitcoin's bear market cancels out the 2-month-long bull market since September 29th, where BTC soared over 63% to attain an all-time high of $68,789.63, which was attained on the 8th of November 2021. Another reason for the decline can also be attributed to mainstream resistance from the US regulators that have invited the CEOs of prominent crypto exchanges, including FTX and Binance US, for a hearing on crypto assets. Despite concerns surrounding volatility and non-compliance with traditional financial practices, Bitcoin continues to rise as a viable asset for jurisdictions within stable economies. BTC now trades $48,000 as of time of this writing. And now let's get back on the bullishness on ETH. The first point to highlight is a breakout in Ethereum as a ratio to Bitcoin, which has reached 0.08, the highest level in 3 years. This number is simply the current value of Ether at $4,650 against Bitcoin trading at $57,500. In other words, with an expectation that ETH continues to outperform, the exchange rate has room to appreciate higher. In early 2018, the ratio briefly traded as high as 0.12, which would imply a price of $6,900 for ETH, assuming BTC remains flat. The setup here looks particularly attractive considering ETH is still a few points below its all-time high of $4,870 in early November. We see a high probability that $5,000 gets taken out, which will represent a milestone. Longer term, an expanding market can send the price significantly higher with a view that the crypto segment is still in the early stages of reaching its potential. Before we go on to the next part of the video, like this video, smash the subscribe button, and click the notification bell right now, or you'll never be able to get into the crypto industry. Now that we are done with the bullishness of ETH, let's now check out the ecosystem of dApps on Ethereum. ETH ecosystem is likely the most exciting aspect of the outlook supporting a higher market value. The key difference between Ethereum and Bitcoin is the concept that its blockchain is programmable, allowing developers to create applications or dApps that are stored and run on the network. The innovation from Bitcoin back in 2009 was the structure of public ledger cryptography, while Ethereum was created to improve on the concepts. The growth this year has been spectacular, considering the most visible applications being non-fungible tokens that have transformed into the hottest buzzword in both finance and pop culture. These are the unique digital items that are stored on the blockchain, representing proof of ownership and transaction history. Beyond the simple graphic-based artwork being traded as collectibles, there is an exception that the concept is expanded into the tokenization of physical items, including real estate. Several companies are moving forward with these types of projects. To be clear, while most NFTs are minted on Ethereum, some projects are being built on competing platforms such as Solana and Cardano. Nevertheless, the momentum in this area supports the outlook for all crypto and digital assets in general, while ETH benefits as the leader. It's encouraging to see that several major corporations have already embraced the technology, which adds to the exposure and credibility of the Ethereum platform. For example, the Coca-Cola Company, or KO, in July raised $575,000 in an NFT auction to benefit charity. Nike Inc. has made headlines with plans of selling virtual goods to brand NFTs, possibly with the sale of sneakers. PLBY Group Inc., the holding company for Playboy brands, is also using the format to leverage its intellectual property. These particular projects are connected with Ethereum. When we think about NFTs, there is a parallel here with the other big theme in technology, which is the Metaverse. In many ways, NFTs and alt tokens operating within Ethereum are the first manifestations of the Metaverse potential. Ethereum can play an important role in driving the digital economy accessible on a global scale. It's still unclear what direction the applications will take over the next several years, but we view ETH as a bet that future. Decentralized finance, in a simple way to think about it, is as in opportunities for products and services that can work outside the traditional financial system. The Ethereum blockchain supports payments, borrowing, lending, and savings alternatives that create real value to users. An important concept here are the stable coins that exist within Ethereum but have their own value tied to something like the US dollar, another cryptocurrency, or even precious metals. The idea here is that within the ecosystem and dApps, stable currencies avoid volatility and work as a separate medium of exchange. The growth in this area ends up supporting the value of ETH, which is exchangeable for all other tokens and stablecoins with climbing demand. And finally, how is ETH's outlook for 2022? The big takeaway is that institutions are increasingly investing in crypto with a recognition that it represents a legitimate and important alternative asset class. Ethereum captures some of those same tailwinds. Comments from the SEC chairman Gary Gensler suggesting the US will not ban cryptocurrencies follow several steps from the US Treasury Department, updating its financial market framework that cements the legality of cryptocurrencies within the banking sector. Separately, the emergence of several new ETFs this year, both tracking the price of Bitcoin futures, like the Bitcoin Strategy ETF or BITO, as well as crypto stocks ETF, supports continued inflows into the sector. Simply put, Bitcoin and Ethereum are here to stay. While the technicalities are beyond the scope of this article, there's an expectation that the total supply of Ethereum may begin to shrink at a pace of about 2% per year as more Ethereum is burned than created with each new block reward. As a result, this marginally deflationary effect can work to add scarcity and support higher prices over time. Ethereum complements Bitcoin within the crypto landscape and can both coexist, serving separate functions. That said, considering the greater flexibility of ETH in terms of applications, there is a real possibility that ETH ultimately overtakes Bitcoin as the largest and most important cryptocurrency by market cap. Indeed, compared to the value of Bitcoin, currently around $1.1 trillion, ETH, with a market value of $560 billion, continuing its trend of outperforming, could get there by next year as part of the bullish case. With a bullish outlook in both BTC and ETH, we expect the market value spread to at least narrow. Finally, another advantage in Ethereum over Bitcoin is its mining energy efficiency. Bitcoin mining has captured controversy due to its climbing global power consumption and environmental impact. Even China banned Bitcoin mining, in part citing the strain on its national power infrastructure, while the Bitcoin mining industry has responded by making a concerted effort towards sustainability utilizing renewable energy sources. Ethereum has gone a step further with its upcoming Ethereum 2.0 protocol update. The process of Ethereum mining will transition to a proof-of-stake compared to the current proof-of-work model. In essence, the process randomizes a selection of the processing power towards a small group compared to the entire global network of computer hardware working to solve the code at once. The expectation is that the global energy consumption required to mine Ethereum is reduced by 99%, while the actual implementation is set to go through phases starting in 2022. The setup makes ETH a more ESG-friendly alternative, which should add to its appeal by the investing community. Well, there you have it. What will Ethereum be like in the future? How do you think this info will affect the market? Let us know your thoughts down in the comment section below. If you like this video, make sure to smash the like button and subscribe to this channel. To learn more about Answerly and Answerly tokens, check out the links in the description.